What income can we use for a mortgage application? A question we get asked all the time and not one with a straightforward answer. So if you want to know, listen up. Hey everyone, welcome back to the channel. My name is Adam. I'm an expert mortgage broker and today I'm talking all about income, all the different types of income there are, what we can use, what we can't use, how much of it we can use and what all the lenders are going to do with it. So if you find today's video useful, give us a thumbs up, subscribe to the channel, there's a new video coming every week. So let's think about our income then. Now today's video is all about being employed. If you're self-employed, I've got content coming soon, I promise. In fact, drop us a message in the comments below if you're self-employed. What questions have you got? Now, if you're employed, the first option we've got here is really easy. If you get paid a basic salary and don't have any other income or any other commitments or any children, how much you can borrow is pretty easy really. You can pretty much times your salary by, depending on the lender, somewhere between 4.5 and 4 3/4, maybe 5 times if you earn really well. But that's going to be a really simple calculation. From then on, it gets a little bit more complicated. So lots of people's income is made up in different ways. So we talked about basic salary. Now a lot of people have a basic salary, but then loads and loads of people have extras on top. So we're talking things like overtime. Overtime is usually paid monthly, although not every month. So with overtime, lenders will usually average your last 3 months' pay slips. So if you've done some overtime and then not done some overtime and then you've done some again, the average is always going to work out fairly accurate. So we're not going back over years and years, we're just going back over the last 3 months. Now from overtime we move on to things like bonus and commission. Now they can also be paid monthly and then similar principle applies. If you get paid a monthly overtime bonus commission, we're usually going to average the last 3. Now if you don't get paid your bonus or your commission monthly, maybe it's quarterly or even annually, we're still going to be able to use that income. Lenders just might not use 100% of it. So if you get paid monthly, most lenders will tend to use most of that income. There's always some exceptions. Lenders are all really different. You get some lenders that are really generous, some lenders that aren't. Some lenders are great if you have variable income, some that aren't. It's a bit of a minefield. So the key message here is you need to have some advice, not necessarily from us, but obviously we'd love to help, but you need some advice from someone that knows all about the different lenders' criteria. Anyway, that's another story. So overtime bonus commission monthly, we're going to be able to use most of it. If it's quarterly or annually, we're probably not going to be able to use all of it. Especially if it's annually, lenders will only tend to use about half of it. Now there's some lenders that will want the last 2 years annual bonus or commission figures. There's also some lenders though that will just work off the latest year. So if you've not long started a job, or maybe you had a small bonus a couple of years ago but the most recent one's been much bigger, we're better off going to that sort of lender rather than one that's going to average the last 2. I've also had some interesting cases lately where we've had people who have had bonus and commission and things paid monthly, but it's been very sporadic. So I had one gentleman a little while ago who got paid I think about £90,000 in 1 month because he'd closed a really big deal. But then for the next few months he didn't really earn anything over the top and his income really fluctuated like that. But he'd been doing the job for a long time and so he went to quite a bespoke lender, not overly specialist but just a kind of specialist arm of a main lender. And they looked at him as a whole and they looked at the last few years track record and they used more income than any other lender would, because if we looked at the average of his last 3, well, he didn't have anything to go on really, so we had to go back a bit further and go to a more bespoke lender, and that can often be the case if you have quirky income. So after those monthly or quarterly or annual figures, we move on to things that are often paid monthly, and we're going to talk about allowances. So allowances are things that you get paid most of the time. So that might be like a large town allowance. So it used to be called London weighting. So if you live in London or around London, you might get paid a little bit more because your cost of living might be a little bit higher. You may also get a car allowance. So company cars used to be really, really popular. Nowadays, not as many people have company cars, more people have an allowance for you to go and buy your own car. So that can be counted as income, and lenders will normally take all of that as long as we can see it on the last few pay slips. You may also get people with a shift allowance, like an overtime allowance, attendance allowance. You know, sounds odd, doesn't it? But I've seen some employers pay an extra amount if you're there all week. We could also have things like responsibility allowance. So if you're a teacher, maybe something like that, and you might be, you know, head of year or head of English or something like that, you're going to get an extra allowance to cover that responsibility that you've got. And usually with allowances, we're going to be able to take 100% of those as long as they're on the last few pay slips. Okay, so far that's all been income that you've had from your employer. Let's talk a little bit about other income we might have as well. So other popular incomes that we see. So if you have children, you may well get some maintenance income. If you don't live with your ex-partner anymore, they may well be paying you some maintenance. We can use that income. Also, if you've got children, you're going to be getting probably child benefit, and that's just a payment that you get every 4 weeks, depending on the amount of children you have. That is going to be a payment every 4 weeks from the government. Everyone gets that up to a certain earning level. So I think if you earn over 50,000, you get some of it. If you earn over 60,000, you don't get any of it. But those under that threshold, they're going to be getting child benefit if you've got children. You don't have to qualify for that. You may also get some tax credits, so we might get some child tax credit, working tax credit. Nowadays, universal tax credit has replaced those other things in some parts of the UK, so that income can be used as well. Universal tax credit is a bit harder than some of the other tax credits that we see. Not all lenders are switched on to universal tax credit yet. So if you do get that, you may well want to speak to an expert about which lenders are going to be best, because there's only a couple of lenders we can go to. If you have things like maintenance, which I said a minute ago, we need to show some evidence of that, and that can come in the form of bank statements or court order maybe, or CSA info. If it's things like child benefit and tax credits and things, some lenders will work on what goes into your bank account, so we can show the bank statements. You may also get an award letter from the tax credit people, whichever tax credit it is. You'll get an award letter, so sometimes we want to see that as well. Now this one isn't child dependent, but disability living allowance, personal independence payment, I think it's called now. So if you've got a disability and you get paid an amount from the government, then most lenders will use that, providing it's guaranteed. So as long as it's a long-term payment, then lenders can use that. There's one benefit we should discuss that we can't really use at the moment, at least, and that's housing benefit. So lenders won't tend to take that into account. I have heard some rumours in the media lately that the government are trying to get lenders to take housing benefit into account, but at the moment, as of kind of middle of 2022, housing benefit isn't one that we can usually take. Now, those of you that are landlords and have other properties in the background, you'll have some rental income as well. Some lenders will take that rental income into account. Now, some will just look at the profit that you're making. If you haven't got a mortgage on the property that's rented out, lenders will usually take that income. Other than that, we're just going to be looking at the profit. There's a couple of lenders though where we can put in the gross amount of rent that you get and then take away the mortgage payment as a commitment, and what's left they will use. So that can be quite beneficial if you have got properties in the background, although obviously that's not going to be for everyone. So that about sums up the different types of income that we see daily. We should talk a little bit about the kind of deductions that we're going to see in amongst your pay and things as well. So if you've got some deductions on your pay slips as well, that may well affect what we can borrow, because the lender is going to factor that into their calculations as well. So if you've got student loan on there and a season ticket on there as well, then that may well get deducted from the amount we can borrow. Outside of your salary, we're going to have deductions, so we might have some commitments like loans, credit cards, personal loans, car loans as well. Car finance is a big one that people often forget about actually being a commitment. Also, if you've got little bits and bobs like sofas and TVs and things, you go to DFS and buy a sofa and it's £45 a month over 3 years. It's easy to forget about that sort of thing, but we do need to factor that into how much you can borrow as well. one of the big commitments that we're going to have, and one of the big deductions lenders are going to make is if you've got children. Children are expensive to run these days. Now, we've talked about the fact that you might get some extra income if you've got children, child benefit and things. If you have got children, the lenders are going to factor that in to how much they can lend, because inevitably you're going to spend a little bit more money than someone that hasn't got children. So all of that goes together, so all of that income in different sources and those outgoings, they all go together to work out how much we can borrow. We call it your affordability. Now, last week's video was all about how much you can borrow, but today I thought I'd summarise a little bit more about the different types of income. So I really hope you found that useful. If you want to know a little bit more about your situation and how much you can borrow based on what your income is and what your outgoings are, you can get in touch with us if you want to. There's a link to book an appointment straight in our diary in the description. There's also a link to our website if you want to go and learn a little bit more about who we are at Vantage Mortgages. So hopefully we'll be speaking to you really soon. Otherwise, I will see you next week on the next video. Take care.